You are watching Huskin's Forex and Financial Market Brief. For a low-cost trial to premium Forex coaching, click on the link below.
The 3 C's of life: choices, chances, and changes. You must make a choice to take a chance, or your life will never change. Hello and welcome. This is Huskins, your Forex mentor. Welcome to the daily review of May 6th and the preview of May 7th, your daily dose of events that shape the Forex markets. Our results for today: a gain of 40 pips on the Australian trade, a loss of 20 pips on the Canadian trade. I've asked Rick to document both of them, and that will be available for the members only. So have a look at the trades which took place so that you can internalize your learning. Now I'm going to talk to you about something called carry trades, but it's going to be with a twist. You Forex traders think about carry trades is buying the high yielding currencies such as Australian dollar versus the low yielding currencies such as the Japanese yen and the US dollar. All right, and they hope to collect a premium or a rollover because of the carry trade. Now that is what the Forex traders they try to do. However, is this the smartest way of making money in the Forex markets using a carry trade? Now I've looked at previous historical charts of several years, and I've come to the conclusion that perhaps that is one of the worst methods to try and make profits. What I have found out is investing in the indexes of the countries which have higher yielding currencies pays a higher dividend. Now for members, if you're interested in me doing a full-fledged webinar only on this, on carry trades with a twist, on how you'd be able to profit from investing in other countries' indexes which has a higher interest rate, and why that is better than investing in just the currency, I'll set up something just for us over the week or two, but I'll need at least 10 emails letting me know that they are interested in this. All right. Now let's talk about the news a little bit. We had the best jobs report in 4 years, which were released by the United States. Basically, total non-farm employment rose by 165,000 in April, and the unemployment rate was unchanged at 7.5%. Employment increased in professional and business services, food services and drinking places, retail sales and healthcare. There was no change in manufacturing. Basically, not even one job was added in manufacturing. And another interesting thing which you need to look at is that the export orders, basically people who want to buy stuff from USA, fell by a considerable amount. Now, another important aspect of this non-farm payroll was that in April, the number of long-term unemployment, those basically who are jobless for 27 weeks or more, declined to 258,000. Not to 258,000, by 258,000 to 4.4 million. Their share of unemployment declined by 2.2%. To 37.4%. Now this was over the last 1 month, but over the last 12 months, the number of long-term unemployment decreased by 687,000, and their share has declined by 3.1 percentage points. Having said that, the non-farm payroll also readjusted the February and March numbers upwards. So all in all, there was a lot of risk appetite sentiment in the market. Now, China's gold mania has reached fever pitch, and apparently the granny effect is taking the global markets by storm. Uh, Now, what exactly is this granny effect? I'll tell you, I'm from India, and culturally, uh, everybody, all the women in our family need to have gold. It does not matter whether we are rich or poor. It doesn't matter even if we owe, a little chain or a little earring or a little bangle is something which each and every lady in our family would have to have. And it was customary to, whenever there was birthdays or big occasions, there would always be gifts in terms of gold. So now, these are the real demand of gold. Whatever you see on the charts and whatever the big investment advisors at Goldman Sachs say, that did not take into account what the grannies in China and India might actually do with gold. Remember when we had that huge drop in the price of gold? That caused Chinese consumers to buy 300 tons of gold, which is 1/10 of the world's annual gold production. So just China, within the last 1 month, bought 1/10 of the annual gold production, worth more than 100 billion yuan, which is about 16.24 billion US dollars. The reason for this big surge in demand, not just from China but also from the other Asian countries, was the recent massive price drop in the price of gold. So that's something which you need to factor in when I'm coming very close to to give a buy signal on gold. I haven't yet done that, but I'm very awfully close to issuing one. The Australian retail sales. So now let's look at the Australian retail sales. You look at this number, this yellow line. That's what we were expecting, but the number came out to be worse than expected. So naturally, the Australian dollar, Australian US dollar went down, and that's exactly what we took part in after the European markets opened. So we sold the Australian US dollar for a cool 40 pip gain. But is that something to worry? Let's look at the trend. Look at this particular trend. It's nice and smooth. I have no worries about anything with the Australian dollar. Now, if the numbers were here, of course I would be worried. But it's a decent, beautiful trend. So there's nothing to get overtly worried about this. Now let's look at the preview for tomorrow. We're gonna have a trade on May 7th. That's tomorrow at 12:30 a.m. Now basically 30 minutes past midnight, and then there is a trade for the Swiss foreign currency reserve, but there is no trade plan for the New Zealand financial stability report. Now it's released twice a year, so basically we have two trades which I'll be looking at, and that's about it for right now. Hope you have a pip-filled day. Thank you so much for watching. Bye for now.